29th of October 2019. We are here for another CMT Association meeting in London with my good friend, Ralph Acampora.
Hi, Alex.
But before we start the meeting, we'll have a small chat with my dear Ralph and trying to get to know the man that has led the CMT Association, created it. Although a lot of people know its history, but okay, I think it's useful to go through it again.
Okay.
So the first question would be, how did it all start for you? Because I know from private conversations we had, you had a degree in theology, if I'm not mistaken. So how did you go from that to markets and technical analysis in particular?
Well, now you're starting with my education. Okay.
Correct.
Well, it was exactly, Alex, it was exactly 52 years ago in May. I was a seminarian studying for the priesthood of the Archdiocese of New York. I went home for Mother's Day. And of course, everybody was happy. We had a great time. My father gives me the keys to his brand new Buick, big car. He said, the car is 5 days old. He said, put a scratch on that car. He said, I'll kill you. Well, the car got totaled with me in it. And I wound up in a hospital for 5 months in a body cast, and I had spinal fusion. It's terrible. I almost died. Someone upstairs was looking after me. Make a very long story short, my father's best friend got me this very fine physician, and Bill Downey was his name, and he was a Wall Street guy, and he would come to the hospital frequently to see me, and whatever he was reading, he threw in the bed. So that was my exposure to the Wall Street Journal, Forbes magazine, and the Barron's, and I was like an inverted turtle that I was on my back. And that was, I said to him, I said, Mr. Downey, I enjoy reading this stuff, and I'm not going back to school. He said, oh boy, I'll get you a job. Well, he couldn't get me a job because I had history, political science, and theology was my educational background. I had no background in finance. And the poor guy felt bad because I couldn't get a job. And I was on crutches, and I saw this ad in the paper. It said, junior analyst wanted, no experience necessary. I said, oh, that's my job. So I got on the crutches, and I ran over. I think the man that was interviewing was afraid I was going to hit him with the crutch because I said, I'll wash windows, I'll do the floor. I was really passionate about this job. Listen to this. He takes a book. He said, you read this book over the weekend and come in Monday, you have a job. That book changed my life. It was Technical Analysis of the Stock Market by Edwards and McGee. That's the Bible. And that's how it started, all by accident.
All by accident, but what was no accident was the creation of the, at then time, MTA Association. All the, I sometimes still get confused about, you know,
so do I.
With, now it's the CMT Association. So how did the MTA start? Okay. What was the beginning of that?
In the old days, this is pre-computer, I had to go every morning to get the price reversals to update the point and figure charts. The firm was called Morgan, Rogers and Roberts. It was at 140 Broadway. And I'd stand on the line early in the morning waiting for my statistics. And I met a young analyst there. His name was John Brooks. John must have been 25, and I was like 27 years old, and we started talking. And we realized that, you know, we were kind of jealous. We were jealous of the fundamental guys because the chemical analysts in Wall Street would have monthly meetings. All of them, you know, and the drug analysts and the auto analysts. And John and I said, gee, wouldn't it be nice if the technical analysts had a meeting? So he went to his boss, Bob Farrell at Merrill Lynch. I went to my boss, Alan Shaw. And they were only a few years older than us. I think Farrell might have been 33, 4 years old. Alan was like 32 or 3. So they weren't much older than us. And they said, no, you have to go to the senior citizens to get permission to do this. So I went to a man by the name of Ralph Rottenham, and he went to a guy by the name of Ken Ward at Haydenstone. And these gentlemen said, well, if you're going to do it, you've got to do it professionally. Everybody that goes to a meeting, you sit down, and you politely raise your hand every month when you're at your meeting, and you ask questions. No tip and clip club, no arguing, my indicator is better than yours. Yes, sir, yes, sir. And that's how it started. It started with being very professional, and all we wanted, Alex, was an opportunity to sit across a table and talk to someone who had the same interests that we had.
And then from, I would say, it snowballed to something that's quite large and respectable.
Oh, yeah.
From a private club of a few
there were 19 of us.
Yes. So it grew to something quite significant. Have you, at what point in history did you start saying, look, this is going to grow into something much larger than we initially thought?
Well, that's a great question. Remember I was telling you about the old gentleman, Ken Ward and Ralph Rotner? Well, they said to us, only people who write a market letter, a technical market letter for a firm was allowed to be the member. So Johnny and I only found 19 people. But as time goes by, a floor trader wanted to be a member because they do charting on the floor. But he didn't write a market letter, so we changed the Constitution. John Murphy, the author of the book, was a student of mine. I think it was 1980. John wanted to become a member, but we were told no commodities people. So guess what? Intermarket analysis, commodities, futures, we changed the Constitution. So as time went by, we slowly started to evolve as more and more people heard about us, and we got more credibility. And again, we were running it very, very professionally. And the most important date in modern technical analysis history is Friday, December 17th, 2004. That was the year, in January of that year, the Sarbanes-Oxley law came out. And the Sarbanes-Oxley law said that all analysts, and I was an analyst, had to take 2 new tests, Series 86 and 87. 87 was new rules and regulations, no problem, got to do that. But 86, they demanded that guys like me had to have levels 1 and 2 of the CFA, or we weren't considered an analyst. Well, I was infuriated. I went down to the organization. I said, give me all the money in your treasury. We got to throw it at this problem. Because if we don't win this argument, the MTA at the time, it was called, we don't deserve to represent anybody. So myself, David Krell, who was past president, Larry Horn, and Stuart Friendship, the 4 of us went in front of the Securities Exchange Commission on that day. One fellow talked 3 minutes on the history of the subject, technical analysis. The other one talked 3 minutes on the history of the organization. Third fellow spoke 3 minutes on the history of the exam. And I had the last 5 minutes. And this is in front of 20 SEC lawyers. They flew these people in from Washington, D.C. And I was saying to the lawyers, imagine if tomorrow morning you lawyers were being mandated to take the medical boards. They're looking at me like I'm crazy. I said, assuming you could pass that body of knowledge, you wouldn't use that body of knowledge in your daily work as lawyers. They're going, yeah. I said, well, that's what you're asking us to do. Test us on our body of knowledge. Correct. And one lawyer comes up to me and he shoves a chart in my face. And by the way, Alex, my knees were like rubber. I'm saying to myself, oh God, he's asking me a question. And he puts his chart and he says, what's fact on this chart? I looked at it. I said, well, price is a fact. And his eyes went like this. And then I went like this to his chest. And I said, earnings are an estimate. You restate earnings. You never restate this chart. He said, damn good answer. I said, you better believe it. 3-4 months later, March of 2005, FINRA accepts technical analysis and the CMT exam as equivalent to the CFA. I am so proud of that. Yeah,
it was a pivotal moment for the industry as a whole, not just
Absolutely.
the CMT Association.
Oh, no,
yeah,
it changed
for
everything.
everyone.
Yes,
I think for everyone. And I think everyone owes a debt of gratitude to you and the association at large for giving us more respect in the industry, more visibility.
Good for you. Yes, that's exactly right. Yes, but it should be that way, and I'm glad that we were in the right place at the right time. And I'm very happy.
Okay, going from industry to back to Ralph. You've been a renowned analyst. People have nicknamed you the godfather of technical analysis. Yeah. You've been at charge for most time than most members are actually alive. Yeah. So, what are your favorite tools? What are your favorite techniques? How do you analyze? Take us through a chart. I mean, if I put the Dow Jones and the S&P in front of you.
First of all, price. I'll repeat, price is my God. I don't own the RSI. I don't own a moving average. I own that price. So the first thing I look at is trend. The saying, the trend's your friend, you better believe it's your best friend. Okay, so I start with the trend, okay? Daily, weekly, monthly. Now, online, you can get minute by minute. I mean, it's amazing. The data that people have today, the young people have no idea how grateful. In fact, at the end of our presentation tonight, I'm going to show you a chart that was in my chart room in 1980. It was all handmade. It's 8 feet high, 22 feet long. I had 4 charts like that. You can imagine what my war room was like, and had a staff of people update that. Today, you don't need that. Amazing. And when we started to look at that, and I looked at price. In fact, the first charts I made were point and figure chart, which was only price and no volume, no moving averages. But I moved beyond that. Now, people always ask, Ralph, if I put a gun to your head, what indicators do you look at? I like RSI and MACD. I look at them, but I don't necessarily look at them daily because there's a little too much noise in there. I like it, look at them on a weekly and a longer term basis. So I feel comfortable with those. Of course, I look at relative performance, stock versus the market. I love ETFs, and a handful of 10 ETFs. You look at all the sectors. My God, you're around the world in a couple of seconds. So that's how I start in the morning. Number 2, I have my spreadsheet hooked up to my Reuters system. I guess you could do this with Bloomberg or whatever. And I put in the support and resistance levels. I say it's in an uptrend, not the computer. And anytime during the day these levels are broken, guess what? It flashes at me. Red for breakdown, green for breakout. Alex, nothing in the world moves without me knowing about it, because it forces me to go back and update my chart. And I love it. And I've been doing that for years, and I can't imagine me, it's a long-winded answer to your question, I can't imagine me not doing that. I have to see what's going on. I don't want some machine telling me that this is this, is that. I can't do that. And maybe I'm a little too old, but today everything's algos, and God help us.
Yeah, it's going to be overboard. Favorite books? I'm sure you've read lots of them, but you talk about Edwards and McGee. Yeah. Other than the Edwards and McGee, obviously that would be like you termed it the Bible. Which ones would you recommend for someone who's starting out?
Patrick and Dahlquist, they wrote a book. I think I'm not sure what the title is, Stock Market Indicators or something like that. It's an excellent book, and it's part of, I believe, the core reading for the CMT. So buying that, you step 1 into it. John Murphy wrote excellent books. I think still even updates them. So those would be 2 right off the bat that I would read if you want to get into the subject, yes.
Going back to markets, what would you say was the best and worst call you've made over the years, and what have you learned from them?
Okay. My worst call, and would you believe this, Alex, we were on the cover of Barron's magazine, myself, Bob Proctor, Elliott Wave, Marty Zweig, who was very famous on Wall Street Week. He was the put-call ratio guy and all that sort of stuff. Elliott, yeah. And myself and a couple of other people I forgot. And Marty Zweig and Bob were calling for a crash. This is a week before the crash, okay? And I was looking for a correction. I wish I could have changed that. And yes, I was very impressed with their call. I saw a decline coming, but the magnitude and the quickness of the decline, that was above my pay grade.
What was your the best call?
Oh, well, the famous call for me, I'm very proud of this, was June 1995. I wrote a 25-page report. Maybe I was longer than that. I think it was a 50-page report. The Dow was around 3,800, and the title of it was Dow 7,000. Remember I was talking about that old man, Ken Ward? Well, I met Mr. Ward the first evening dinner meeting we had at the MTA. This is in 1970. By the way, the CMT Association is going to be 50 years old next year. Oh, boy, you got to come to New York. We're going to have a real celebration. I can't wait. We're going to get all the past presidents and everything. Well, I asked Mr. Ward. In fact, Johnny Brooks and I were sitting. Mr. Ward was right in the middle of us. We're sitting, and I leaned over to him. By the way, this is 1970. The guy is 80 years old. That meant he lived through every bull and bear market in the 20th century up to that night and wrote about it. So I asked him, Mr. Ward, what was the most difficult market? I said, oh, I'm sorry, that's a stupid question. It's got to be the crash of 29. And he leans in with a grovelly voice. Now, Brooks's head's there. The 3 of our heads are like this. And he goes, no, young man, that wasn't the toughest market. I said, really? He said, no. He said, we lost some money, but we didn't get. If you look at it, it was leg 1, rally, and then leg 2. He said, we ducked the other leg down. Okay. Now I understand what he was talking about. But he said the toughest market was the early 60s. I said, but Mr. Ward, the market went up. He said, yes. And we all said it was overboard, overboard, overboard. It was going to need a correction, And we looked foolish. He said, you'll look in the newspaper, you'll see us, me and Rotten and all these guys. We were wrong. I never forgot that. In 1995, the cover of Dow 7000 report is the Dow up like this, 900-point gain, no correction. And I titled it, have we seen this before? And they said, yes, the early 60s. I read every Wall Street Journal every day from 1960 to 1966. No computers. I had to go to the public library, cough with all the dust in it. And you know what I found that we had common between the mid-90s and the early 60s? Low inflation, low interest rates. And that was the theme of my, And guess what? Low inflation, low interest rates still, to this day. She must be pretty good for secular bull markets. Yes. That was my call.
That was a great call. So what's your call on the future of technical analysis and the CMT Association going 5 years or 10 years from now? Well, where would you like it to be?
Well, you heard the story how we struggled and everything, Brooksy and I. You would think that Ralph Acampora today would be the happiest guy in the world when he turns on the TV set. You see all these talking heads talking about moving averager and Fibonacci, Liberace numbers and all this sort of stuff, and they're going like this, making lines on charts and all. I actually am scared to death. For number one, were they educated in the subject? None of these people have CMTs, number one. Number two, the viewing audience. Do they really understand what they're saying?
Said, yeah.
In fact, go look at the TV. These guys are talking long term, and they got a 5-minute chart on there. And I'm going, what's going on? So, to answer your question, we still have a lot of education to do. And I think that CMT Association, in fact, I was told the other day that many of the candidates today taking the CMT exam already have a CFA. So a lot of the academics and people are slowly coming around to saying, you know, for all the years I've been teaching, I call it fusion analysis, when you take the fundamentals and you tie the technical to it. Then you have the whole picture.
Correct.
Yes. So I see the world slowly coming around to that. And thank God the CMT Association's there to help and guide them. So, no, I think we'll continue growing.
Are you bullish on technical analysis?
Oh, absolutely. Someone asked me, did anything change with all the years? Ralph, you've been in the business over 50 years. No. The only thing that scares me a little bit is the volatility intraday. I mean, you get 400 or 500 point swings intraday. I call my nephew, Jay Woods, on the floor of the stock exchange whenever we have these wild days, and I yell at him because he's a specialist. I said, Donnie, what are you doing? And he yells back, Uncle, if we had people on the floor, that wouldn't happen. He cries, you know. Yeah, so I think the computers, I don't know. I don't know how people day trade when you get swings like that. I think maybe, I don't know. As you see, I don't have an answer, so I don't know.
No, I fully agree with you. Now, intraday trading has changed a lot since it's an unfair advantage for people who got access to huge computer power. From a day-to-day, like intermediate term trading, I don't think much has changed.
No, trend is a trend.
Yeah,
yes.
Exactly.
Oh, absolutely.
But, so
that's what I meant
from
to
an
say.
intraday point of view, I think it's changed. It's a new ballgame.
I would think so. I don't day trade, so I don't know. But I know people that do it, and they're pretty good at it. And
someone said you're picking up the change that Goldman Sachs has left for you on an intraday basis. Yeah.
Probably right.
So, if you could call 25-year-old Ralph, what would you tell him? What would you advise him?
Today?
Yes.
If they're a 25-year-old. In fact, I just met someone that said, gee, I'm thinking of maybe getting in the industry or at least start to learn. I told him immediately, get the CMT exam. Exactly. Because I know that process is going to force this person to put his head in the books or her head in the books and read up on it, And I said, and then when you start it, come see me, and I'll show you my slides. I have 400 or 500 slides. Terrific. I'll show you some tonight. And, I'll help anybody I can.
And the last question would be, how do you spend your time hobbies? I mean, outside of markets, I know you're very passionate for it,
Yeah.
but maybe there are rumors I've heard about you drawing something on your barn, if
yes,
I'm not mistaken.
yes.
So can you, what are your hobbies?
Can you imagine this Bronx kid from New York now has a farm in Minnesota? And for those people who don't know where Minnesota is, I affectionately call it Southern Canada. It's right up under the belly of Canada, right in the middle of the United States. My lovely wife, Rosemary, that's her family farm, and it's a long story. I bought the farm. And a couple of years ago, well, I started in the business 1967, so in 2017, it was my 50th anniversary in Wall Street. So I convinced my wife that I would hand paint a monthly bar chart of the Dow Jones from 1967 to 2017. And boy, I tell you, I got a lot of PR from it, and what turned out to be kind of a, I won't say a joke, but I wasn't serious when I started. It became very serious because on the wall are all the recessions, all the presidents of the United States at that time, those years. I have little stickums that says what happened each year. I have a 48-month moving average and have all the percentages up and down. And the Wall Street Journal picked up on it, and they wanted to do an article on it in 2017. I said, wait, when the Dow goes through 23,000, you can say that the market went through the roof. And they did. But more important, listen to this. I just completed. I went around, that's the north wall. I went around the south wall of the barn early this summer. I said to myself, what if I capture all the history of the stock market? I started in 1871 with the Cowles Index, that's spelled C-O-W-L-E-S. For those who don't know the Cowles Index, that index became, in 1957, Standard & Poor's 500. So Cowles started it. Then in 1886, Charles Dow started with the railroad average, and I start with the weekly railroad average. And then in 1896, I started with the industrial average. So I have everything that happened in the stock market, with the presidents, all of the, and someone, I had a barbecue with a bunch of Wall Street types and people that were interested in finance. They came, this is a couple of months ago, and I gave them, not only could they walk through history, but I annotated, and I was describing all of the recessions and panics and things, and they all turned to me and said, hey, you got to write a book. And I teach at St. Thomas University in St. Paul, Minnesota, and the dean came out from the school, and she encouraged me to do that. So I started writing the book, but I haven't done anything yet. I've written a couple of chapters, but I want to incorporate it with a video while you're walking through. I could show you, and then we could talk about what was Ulysses S. Grant, president, thinking at that time. What was his problems? And, you know, it's exciting. I think it's another project.
We'll be looking forward to the book,
Yes.
and I promise you that I will come visit you at the, at the barn.
Oh, sure.
But we have to do a barbecue.
Yes. Oh, absolutely. Nothing like a barbecue in Minnesota.
Well, Ralph, thank you very much. I'm looking forward to your presentation.
Oh, thanks a lot.
And,
thanks for inviting me.
Thank you for watching the interview with our dear Ralph Acampora, and we'll be hoping to see you sometime in the London chapter of the CMT Association. This is Alex Spiroglou. Thank you very much.